Hello, everybody. Welcome to Climate Finance 101. I'm just going to share a couple introductory slides, and then we'll really get into it. I'm Matt. I run Climate Pledge Collective, a tiny climate org that's too small to fail, with my wife Myrtle, who's also presenting today. And since the pandemic started, we've been looking a lot at the big banks and their financing of fossil fuels. But what we're really excited about today is that we're going to sort of present a much wider range of knowledge to you today. So yeah, we're very excited, and there's some great panelists who I'm about to introduce. But I do want to begin with a land acknowledgement. We begin by acknowledging that the land on which we host this webinar is the traditional territory of the Wendat, the Anishinaabe, the Haudenosaunee, Métis, and the Mississauga of the New Credit First Nation. I know many of you are calling in from other areas, so be aware of that. And I just wanted to comment, I guess, that I always feel that the land acknowledgements are somewhat insufficient because they're just words. So I do urge all of you to think about the commentary, especially in the second panel, and find a way to take action to go a bit beyond just sort of words on a screen. So the webinar will be in two sections. First, we're going to have 3 individual talks on pensions, investments, and banks. Patrick DeRochie is the Senior Manager at Shift Action for Pension Wealth and Planet Health, and he'll be talking on pensions. Tim Nash is the founder of Good Investing, and he'll be talking about personal investments, how they're financing the climate crisis, and how you can take control of your portfolio. And Dr. Myrtle Millares, the co-founder of Climate Pledge Collective, will be talking about the banks and their financing. And after that, we'll have a brief Q&A where you can ask questions about any of these topics. And then after that Q&A, we're going to move on to a second section, which is an open panel on free and informed prior consent, FPIC. And we're really excited about this. In our own Bank Switch campaign, we started with demands that were from BankTrack, which is a European organization, and there wasn't enough about Indigenous rights in it. And we did add in our explanations and in our presentations that you should also ask your branch manager about the projects they're funding and whether they have Indigenous consent. But I'm really excited about this presentation today because we can sort of learn exactly what the technical things you should be expecting from a bank or another large institution are to understand whether or not they're really in alignment with FPIC. So the speakers for our panel are Cook P. Wilson, who's the Secretary Treasurer of the Union of British Columbia Indian Chiefs, Kayah George, who's the Divestment Campaign Lead at Indigenous Climate Action, and Eugene Kung, who's a staff lawyer with West Coast Environmental Law. And they're going to sort of talk about free and for prior consent. They'll give a brief introduction to the topic, but also really get into some of the complexities about how it's actually applied, how we can understand whether sort of an institution that's funding something that's a few steps back from the actual project, how they should look at these kind of issues. So we're glad to be able to dig into that a little more deeply. And I just want to say sort of about the Q&A, the 2 Q&A sessions, please do use the Q&A function. It's a little button on your screen because we won't be able to catch everything that goes in through the chat probably. So if you do have a question that you want answered, please put it into the Q&A. And that's where I'll be looking for the Q&A sections. And then lastly, I just wanted to give a little bit of context for the sort of presentation as a whole. I think sometimes activists, divestment activists get painted as radicals, that, oh, it's too fast, it's too abrupt. You'll see the quote here from BMO CEO Daryl White is saying exactly that. But the IEA, the International Energy Agency, which is not a radical group, it's a very sort of conservative, well-regarded institution that estimates energy demand and energy sources. And they did a report this year on net zero 2050. And they said that if we do actually want to achieve net zero 2050, then there's no need for any more oil and gas infrastructure beyond what the report came out earlier this year, beyond what is already in place. So the demand to get the banks and the pension funds to stop funding the expansion of fossil fuel industry is not really a radical one. In a way, it's a moderate and practical demand that sounds abrupt because these large institutions have delayed so long. And in a similar vein, I think some of the indigenous demands, the demands for land back, they sound abrupt, but they're really just a moderate and practical demand based on something that we should have started 500 years ago, you know? So we're so far behind that the change seems abrupt, but really it's the sort of the middle of the road thing to do. So without further ado, I'll go on to our first speaker. So I'd like to hand it over to Patrick DeRochie to talk about pension funds in Canada.
Thanks, Matt. I'm just going to share my screen here. Hi, everyone. Thanks for inviting me to speak this morning, and thanks for the intro, Matt. My name is Patrick DeRochie, and I'm the Senior Manager for Shift Action for Pension Wealth and Planet Health. We're a small charitable project that tracks the fossil fuel and climate-related investments of Canada's largest pension funds and works to empower and beneficiaries of those funds to engage their fund managers on the climate crisis. So you might be asking, why pensions? Can everyone see my screen still? I think you can, so I'll move on.
It's just popped up now.
Great. For one, we think that is morally wrong for pension funds to invest our retirement savings in infrastructure and companies that are making the planet uninhabitable for their own beneficiaries. Secondly, the financial health of pensions are at risk from the climate crisis. The security of workers' retirements is at stake. And finally, success or failure in addressing the climate crisis depends in part on pensions aligning their investments with a safe climate future. A bit of that moral case for ending fossil fuel investments. There's a very clear and strong case for pension funds to stop investing in oil, gas, and coal, because continuing to do so puts a safe climate at risk for everyone, including their own members. Why is our money being invested in companies and projects that violate Indigenous rights and could literally make the earth uninhabitable by the time we retire? This argument resonates really deeply with me, and I hope for you as well, but I'm also going to focus your attention tonight on some of the financial risks specifically that your pension fund would care about. For pensions, this is about the best interest of their beneficiaries and the long-term financial health of the funds. Pension funds have a legal fiduciary duty to invest in the best long-term interests of their beneficiaries. That legal duty requires the fund to minimize risks and maximize returns, with the goal that for a new worker who just started paying into the fund this year, there will be enough capital to pay their retirement benefits when they retire in 30, 40, 50, or 60 years. The climate crisis carries significant financial risks that could severely impact a pension fund's ability to pay retirement benefits before 2050. This could lead to increased contributions, decreased benefits, or worse. And I'll quickly walk through some of these finance risk in particular for pension funds. I'll try to move through this quite quickly. So first is physical climate risks. These are obviously the rising impacts of a warming world that we're seeing today: fires, floods, heat waves, droughts, sea level rise, extreme weather, which of course damage the ecosystems and infrastructure that underpin our economy. In particular, physical risks threaten the value of commercial real estate, utilities, and infrastructure, which I'll note later in this presentation, a lot of Canadian pension funds own in their portfolios. The next little category is transition risk. So obviously solving the climate crisis requires a rapid global energy transition away from fossil fuels and into clean energy. It's not optional. Investments in fossil fuels or fossil fuel dependent industries are poised to suddenly and irreversibly lose value in the face of this transition. And it's happening now. Technological disruption is currently underway as wind and solar become cheaper and more cost effective than coal or gas power in most of the world. The coal market is collapsing. Electric vehicles are rapidly accelerating and will increasingly replace oil as a transportation fuel. Fossil fuel companies are often valued on future production, but as demand falls in the coming years, experts have warned the values of these companies could collapse very suddenly. So maybe you've heard the term carbon bubble or stranded assets. You do not want your pension savings invested in a bubble that is about to pop. You don't want to be invested in an industry facing structural permanent decline like fossil fuels. And that's why oil, gas, and coal have become an increasingly risky investment to hold by pension funds. A bit about some policy and regulatory risk. So we need to assume here that our governments will actually achieve the Paris Agreement and put in place the policies, regulations, and laws that require that. So in Canada here, carbon pricing, the ban on internal combustion engines, building retrofit plans, phasing out coal, oil and gas will come soon next. Industrial regulations to reduce emissions across the economy, electrification, and I'd also add into this category litigation risk. So obviously we're seeing this wave of lawsuits against fossil fuel companies for lying to the public about the impacts of their products and to cover the damages that they're now inflicting on societies. So this is also a risk that pension funds got to take into consideration that could see the social license to operate of fossil fuel companies be quickly taken away and fossil fuel companies be on the hook for massive public liabilities. The last category I'll talk about is systemic risk. And that's if we don't dramatically slash emissions and stabilize global temperature in just the next few decades, there will be no safe place to invest your pension because global economic growth will be fundamentally damaged across the economy. Your pension managers depends on the overall growth of the global economy to grow your savings. And even the most sophisticated investor, which would include Canadian pension funds, will not fare well if we do not achieve relative climate safety. So investing in your best long-term interest actually requires these pension funds to take aggressive action on climate. These are just a few stats to show what I'm talking about here when we're seeing these massive GDP headwinds, these risks to the financial stability of the global system, these huge problems that pension funds will face if the climate crisis continues to get worse in the near future. That was a bit of doom and gloom to kick off the night, but there's also an upside here. And there's actually huge financial opportunities available for these pension funds who know where to find them and then take bold action to invest in them. To drive growth, we need pensions to invest in the flip side to the technological disruption I talked about, and exposing your savings to the exponential growth in clean energy, energy efficiency, electrification, sustainable agriculture. Investments in climate solutions is a safe long-term bet for these funds. So we need these funds to make big investments in climate solutions and support communities and workers, respect Indigenous rights, and transform the economy away from fossil fuels, all while generating strong returns for their beneficiaries. To get a little bit more into the substance of this presentation, SHIFT is focused on the largest 10 pension funds in Canada. I've listed them here. We have CPP at the top, which is now over $500 billion, all the way down to OP Trust, which is the pension fund for OPSEU employees in Ontario at $23 billion. And then you have a range of huge pension funds in between, including the Quebec Pension Plan at number 2, Ontario Teachers at number 3, and then BCI and AIMCO out west, and a few other the big Ontario funds based in Toronto here. And just to put that in perspective, $2 trillion is almost as much as the entire GDP of Canada. Or to put it another way, the federal government's revenue last year was actually $394 billion. So I just want to get across the scale of how big these pension portfolios are. Back to the question of why pensions, and if you had told me as a climate activist that I'd be working on pension funds even 3 years ago, I probably would have laughed. But I think we have a new real lever for climate action here. So for one thing, these are huge asset managers that are globally influential. So pushing Canadian pension funds to align their portfolios with a safe climate future means that the world will take notice and we can set an example for other big asset managers. Secondly, millions of Canadians are beneficiaries of these pension funds. These are our deferred wages, they're our retirement savings, and we should have a say in how they're invested. So this also means that there's a massive pool of Canadian beneficiaries that can be mobilized to take action on climate change using pensions as a lever. In many cases, these large public sector unions are key stakeholders in pension funds. So union members tend to be beneficiaries of these funds, and unions often appoint trustees and directors to their boards. That means we have a natural ally to ensure pensions are invested in a safe, sustainable future through our labor unions. And finally, pension funds have the capital to invest in economic transformation. Not your typical savings accounts. These funds are so huge. They have massive, diversified portfolios. They own large parts of the real economy, ports, airports, energy and water utilities, roads, farmland, infrastructure. In some cases, these pension funds outright own global companies, and that means they have the capital and the power to transform them and transform the economic system we need to avert climate catastrophe. And if you put it into perspective with the $2 trillion in these 10 funds, even if we shift 1% of those portfolios away from fossil fuels and into climate solutions, that's $20 billion that we've put toward the energy transition. I'll give a few examples of Canadian-owned funds. So I'll start with Puget Sound Energy, which is an integrated electric and gas utility in Washington state that's majority owned by Canadian pension funds. To their credits, Puget Sound Energy has a beyond net zero by 2045 commitment and is investing in efficiency, battery storage, and renewables. But on the other hand, 66%, 2/3 of their electricity generation came from fossil fuels in 2019, including 35% alone from a coal power plant in Montana, while just 9% came from winds. They're also planning to build 1,000 megawatts of new gas-fired power generation between 2026 and 2045, and they're obviously going in the wrong direction with that. The utility is trying to build an LNG export facility in Tacoma, Washington, and local Indigenous groups there have called this environmental racism full stop. And finally, this utility waged a really sophisticated PR and lobbying campaign to try to prevent local utilities and local municipalities in Washington from banning new gas hookups in new homes and buildings. So we're actually seeing this utility actively trying to block climate action, even though these pension fund owners claim to care about the climate crisis. Another good example is Coastal GasLink. I'm sure many of you have heard of this pipeline. Last year, AIMCO and a private equity firm called KKR spent $6.6 billion buying a 65% stake in this gas pipeline from the interior BC to Kitimat. For one thing, there's huge financial risks here. We've already seen construction delays that are costing almost $1 billion now on this project. LNG Canada, which is building an export terminal, has also set back completion by 2 years. The Asian markets that would see some of this gas transported there, if built, are already oversupplied with natural gas from closer sources. And finally, wind and utility scale solar are cheaper than gas, so we don't see why there's an economic case for building new gas infrastructure. From a climate perspective, I would justify fracking expansion in BC and Alberta that would be inconsistent with Canada's and BC's climate goals. And finally, this project is a violation of Indigenous rights. You've probably seen in the news that TC Energy is trying to build this pipeline through unceded Indigenous lands. And in the Wet'suwet'en territory in particular, they've been trying to stop this. Right now, as we speak, we're seeing police and TC Energy trying to remove Indigenous folks from their lands, even though they've never ceded these territories to Canada or to any company. And this is obviously problematic in itself, but it's also causing public opposition, regulatory delays, blockades across the country, and raising the financial risks for AIMCO to keep investing in this pipeline. The third example I'll give is Enbridge. You can see on the graph on the left that 7 of Canada's largest funds hold about $1.4 billion US in Enbridge shares. But Enbridge just started operating Line 3 just this week, actually, and that doubles the flow of crude oil to 760,000 barrels per day. This is going to lock in carbon pollution for a 30 to 40-year pipeline lifespan. It's going to cross 200 water bodies and 3,400 acres of wild rice waters. And of course, this is also a project that ignored Indigenous treaty rights and trampled the rights to build a pipeline through Ojibwe and Anishinaabe territory against the wishes of Indigenous peoples who lived there for thousands of years. So some of the things that SHIFT is asking of pension funds is public commitments in line with the Paris Agreement. We want to see a 1.5 degrees Celsius aligned portfolio. We want to see a short-term plan with interim targets and dates to get there, and a plan to decarbonize our portfolios by 2040. We want to see immediate action to exclude new fossil fuels from the portfolio, don't invest in new fossil fuels, and then phase out by 2025 current fossil fuel investments. For their engagement policy, we want them to forbid lobbying from owned companies that undermine climate policy. We want to see companies required to have timed pathways to net zero emissions. And we want to see companies link their executive compensation to emissions reductions. And pension funds have the power to force companies to do that. We also want to see massive investments in climate solutions, like I mentioned before, because those will be profitable and we need them to avoid the climate crisis causing breakdown. Finally, what you can do now and how SHIFT can help. So for one thing, we have a climate action toolkit for pension fund members. For those 10 funds I mentioned before, we've collected all the information that's publicly available, put it in one place so you can see how your pension is being invested. The one thing you can do right now is go to shiftyourpension.ca and send a letter to your fund managers calling on them to stop investing your pension in fossil fuels. We're doing a lot of work to generate media and coverage of this to raise public awareness and then amplify it on social media. We can host a workshop on any of those pension funds I mentioned. If you're a member of those funds or a group of members of those funds, we'd be happy to do a webinar for you. We've been arranging meetings between beneficiaries and their fund managers. And finally, you can speak to your union or any other organization that employs you to get involved in this fight, because they're often big stakeholders in these pension funds. And just remember that these are your retirement savings and you have power over these. Like I said, go to shiftyourpension.ca right now. There's a drop-down menu where you can send a letter to your pension funds. I know some of you might not be a member of these big pension funds, but keep in mind, everybody outside of Quebec is a member of the Canada Pension Plan as working Canadians. So you can send a letter to the CPP with one click using our tool as well. And finally, I'd just like to end off with this slide. It shows the emissions reductions that are possible from different types of personal actions. So, you can maybe buy an electric vehicle or fly less often or switch to a vegetarian diet. And those are all good things. We should try to do them. I try to do those things myself in my own life. But when we're talking about real emissions reduction impact here, your portfolio can have a massive change in reductions, particularly if it's a pension fund that has billions of dollars under investments. So I'll leave it at that. I just want to get across how important these levers for financial action are and why you should start asking your pension fund about the financial risk of climate change and to stop investing in fossil fuels.
Thanks so much, Patrick. Yeah, I urge everyone to go and sign up. I've done it in the past. It's quite easy, and you are probably a member of the CPP, so it does apply to you. And I don't know, Patrick didn't mention it, but they just had a big win with the Caisse de dépôt in Quebec. So this is working. The pension funds are starting to get the message and starting to shift their action. So yeah, I urge everyone to join in on that. And then I would like to invite Tim Nash to present to us on sort of your personal investments. Tim Nash is the founder of goodinvesting.com, and he has all the tips on how to keep your finances stable and also not doing harm. So thanks so much.
Awesome. Thanks, Patrick. Thanks, Matt. Thanks so much to the organizers for putting this on. Thank you. And thank you for everyone who's here listening, spending your Tuesday night with us. It's quite awesome to know that people are as interested in this topic as I am. So, really love Patrick's presentation. I think he did a great job sort of laying the groundwork for this next talk because, most of us don't have trillions of dollars to invest. Most of us have obviously much smaller portfolios, but a lot of us do have investment portfolios. And so I think it's really important to think about how we can look at this from a personal perspective. So my name is Tim Nash. I'll give you a quick background on me. I grew up in London, Ontario with my dad in the investment industry. So I sort of grew up around stocks and bonds. From there, I studied economics and philosophy out on the East Coast at Dalhousie. And I always had a lot of issues with the economic system that I was being taught. The models just seemed overly simplistic, and it seemed like there was something missing. And it wasn't until my third year, I did an exchange to New Zealand. And that's where I took a course in triple bottom line economics, this idea of people, planet, and profit. And that's when light bulbs just went off in my head saying, okay, this is what has been missing from all of these economic models, is that they just completely ignored people and the planet. I went home to my fourth year economics professors full of questions, and they did not have answers for me. So I went to Sweden and I did my master's in sustainability. I did my thesis focused on this topic of socially responsible or sustainable investment. Graduated in July of 2008, came back to Canada ready to take the investment world by storm. And 2 months later, the stock market crashed. And, it was a big one in 2008. And, really there were no jobs available. And frankly, sustainability got thrown on the back burner. Just nobody cared about it. So that's when I kind of started my entrepreneurial journey. I've been at it for I guess it's almost 13 years now through a few different iterations. But really where I've landed is that I am a financial planner. I'm not a manager or a broker. I never touch my clients' money. Instead, I'm all about coaching and education and empowering people to be able to make some intentional investments. So I'm going to go through my framework today and just kind of how I approach these things. And hopefully we'll have lots of questions at the end. So when it comes to a basic investment portfolio, doesn't matter how you're doing it, what types of investments you're doing. Everything starts with a pie chart. There's going to be a mix of both stocks and bonds. So stocks, we're buying shares in the company, whereas bonds are debt. We're loaning money to governments and corporations. And then there should be a healthy geographic mix. We talk a lot about diversification and the benefits therein. That what we want to do is spread it around so that we'll have a mix of sort of Canadian stocks, US stocks, international stocks, as well as bonds. Now, the problem is that when you buy a traditional investment fund, right? When you open it up and when you look at what's inside, for sure, there are going to be things in there. Unless you're going out of your way to invest in a socially responsible fund, you're going to have a whole bunch of nasty stuff in there. There's going to be a lot of fossil fuels in there. We're going to have tobacco companies like Philip Morris, weapons like Lockheed Martin, definitely a whole bunch of pipelines, gold companies. I don't need to tell you sort of some of the very egregious behavior of these companies. Everyone's going to have their own definition of sort of where they draw the line of what they want to get rid of. But these are some of the common things that I hear from clients where they're just like, Tim, thumbs down. I don't want to put a penny into these things, right? So, really back to this traditional portfolio. This is what a normal investment portfolio looks like. What I've done is created these sort of sustainable portfolios. And this is the broad model that I use, where we're still going to want diversification between stocks and bonds, right? And we're still going to want that geographic diversification. But what I do is I break it up a little further and I talk about doing less evil versus doing more good. Right. And all, these are different approaches that you can take. But to me, you'd want to have a mix of these different things inside of your portfolio. You can see, I tend to err on be a little on the conservative side, that most of it is sort of doing less evil, stocks, and then maybe a little bit of green stocks. And then we can have some doing less evil bonds in here. And then we will have some impact bonds in here as well. I'm going to go through each of these to describe what I mean by sort of doing less evil and doing more good. So before I do that, just want to talk a little bit about the trend, that like I said, I've been in this for over a decade. And whereas when the market crashed in 2008 with the economic recovery, no one cared about sustainability. Whereas this time it's different, that we did have the COVID crash last year. And then since that crash, my goodness, sustainable investing has just popped. That really it was kind of, this is assets under management. So this is how much money is invested in these sort of sustainable funds. And you can see it was pretty flat for a while, a little bit of growth. We had the decline when all markets fell. And then since the decline, it's more than doubled since March of last year. So really, this is like something that a lot of people are talking about, really, really interesting. And for me, it's just so nice that having been talking about this for so long, that finally it feels like sort of the rest of the world is catching up with me and is actually willing to shift their money right now. From there, people always ask me about financial performance. There is often an assumption that responsible investments underperform, that, people are like, oh, that's cute, you want to save the world. Well, I'm in this to make money, right? But actually, responsible investments have done just as well, if not a little bit better than traditional investments over the last 1 year, 3 year, 5 year. These are fairly recent. I think these are a second quarter, maybe even third quarter results from a group called the RIA, the Responsible Investment Association. Really what I want to show here is that, you don't need to sacrifice returns, that with this approach, what we're trying to do is get roughly the same returns as a traditional portfolio, but to do it in a way that's in line with your values. Obviously, if the economy continues this shift towards sustainability, if we get serious about climate change and taking that action, then we could see that sustainable funds outperform. But I'm not going to promise this. I don't want to, really for me, I'm happy earning those sort of market rates of return. What I want to be clear here is that you don't need to sacrifice performance when it comes to responsible investments. From there is this sort of approach I call doing less evil. So there are a bunch of different strategies. Everyone's going to have a different definition of good and evil. So these are just kind of the tactics that you can take. The first one is called negative screening. So this is where we exclude sin stocks, quote unquote sin stocks. This is where fossil fuel divestment would be. That this is the language that we use, that we're asking portfolio managers to have a negative screen and to remove all fossil fuels from that portfolio. From there, there's also this approach called ESG, environmental, social governance, data, and analysis. This is where we give companies a sort of sustainability score. And then we can either just maybe like tilt it and give, put a higher weighting on companies with a better ESG score. Or sometimes they'll have a threshold saying, if your sustainability score is below a certain threshold, boom, you're cut. It then kind of turns into a negative screen. But this is a really big one for people. They might not be quite ready to completely divest from fossil fuels. Well, let's make sure we're at least doing the ESG analysis to make sure that we are investing in at least the sort of the best of the bad lot. From there, the final approach is kind of cool. It's called shareholder activism. This is the idea that as a shareholder, you can actually vote your shares. Now, it's rare that you would like show up at an annual meeting and actually vote your shares, although you could. It's more likely that you're going to be invested in a fund, and we want to make sure that that fund is voting our shares to push that company in a more sustainable direction. We had a little win earlier this year with Exxon, where I think it was like 2 or 3 of their board members got replaced with people who at least understand that a green transition is necessary. So, this is a way, again, you still own shares. You'd have to own shares in Exxon to be able to vote for them. But, if you weren't ready for complete divestment, then, you could at least make sure that your shares are voting to push companies in that right direction. The big thing you need to be worried about right now is greenwashing. Like, this is the biggest problem when it comes to responsible investments, that, ESG is a really popular label right now. Like, this is hot. You saw the assets go up. The marketing machines are in full force with these funds sort of saying, you can save the world and save for retirement at the same time. And it's like, there's no label, there's no certification, there's no verification process right now. It's very much the Wild West when it comes to this. So don't trust the label. There are wide options, a wide range of options available, everything from sort of a small step in the right direction, very similar to a normal investment fund, just like a little sustainable, all the way through to what I call my crunchy granola approach, which is, kind of much deeper on the sustainability side. There are trade-offs as you go through. I'm happy to speak to that if people are curious, but I just want you to know there are a wide range of options, and really you need to look inside. You can't trust the marketing. You can't trust an advisor that says, oh, this is the green one. Like, look at what's inside, make sure you see the full list of companies. And if there are companies in there that are a thumbs down, you might want to find a better product. From there, in terms of the green stocks, this is like the doing more good side. This is where we're investing in themes. So these are what we call thematic funds. And these themes are going to be things like renewable energy, clean technology. They're funds that are linked to the UN Sustainable Development Goals. So again, there's a wide range of options here that you can look at. You really need to be careful with these, especially with the renewable energy and like the sexy technologies. I would put sort of renewable energy and electric vehicles, that these are sectors that have really popped. Had you bought them, 2 years ago, you'd be really happy. You'd be like, yeah, Tim, I did well. But that, it kind of popped in sort of November, and then it got a little bit overbought. And then we actually had a bit of a correction. So a lot of renewable energy stocks are actually down from their highs at the start of the year. Tesla down from their highs. That it's hard to know the valuation. These things often are more volatile. They are riskier. This is why I only want you to put a slice of your pie into these green stocks. I would never want someone to sort of bet the farm or put all of their money on these green funds, just because it's like, they do tend to be more volatile, a little bit riskier. So again, make sure you know what you're actually buying there. My favorite, I'm not going to talk about doing less evil bonds. They use the same thing, the sort of the screening and the ESG. Really, I want to talk about impact bonds, because this to me is like the coolest thing. This is where we're loaning money directly to nonprofits and co-ops in our own communities. So right now, I've got an office at the Center for Social Innovation in Toronto, the annex location at 720 Bathurst Street. And I refer to this as the home the community bonds built. because the Center for Social Innovation is a nonprofit that owns 2 buildings in downtown Toronto and has these co-working spaces for social entrepreneurs such as myself. And how the heck does a nonprofit buy real estate in downtown Toronto? And the answer is community bonds, that people were able to loan money to the nonprofit that basically built to build this co-working space that I'm in right now. They pay a return. I think it was like a 3.5% return on those community bonds. This is where you can have a direct positive impact by loaning money to, renewable energy co-ops and, these sort of impact investments. Ideally, there's something that really connects with the mission. This is sort of investing in the change you want to see in the world and have that sort of direct positive impact. There are some downsides to it. Obviously, we're loaning money to a nonprofit, so it's a little riskier, although it is backed by the building. So again, you need to evaluate each one. And then also these things are not liquid. That when it comes to these impact bonds, it's not like a fund where you can buy and sell it whenever you want. Sort of the window opens, the nonprofit issues a bond, they sell out, the window closes, and then you're locked in for 3 years or 5 years or 7 years. So again, only a small part of your portfolio. You wouldn't want to put all of your money into these impact bonds. But for people who care about these things and, really want to have that direct positive impact, this is a really cool place for you to invest maybe 5 to 10% of your overall portfolio. So, there's a lot of information here. I want to make sure I leave time for questions. So, I'll leave this website up, which is, I've got my website, goodinvesting.com. And just recently in the last few months, I've added this little research tab, which is where I put a lot of my research for free. You don't even have to give me your email address. You can just get it. I have model portfolios there. They all kind of follow this model of doing less evil and doing more good. So if you want practical examples, you can see those. I also have my research lists. So I did a screenshot for this one. This is the list of available retail impact investments in Canada. You can see I sort it by where it's available. A lot of the co-ops are only available in the province. They're provincial. So, make sure it's available where you live. The minimum investment, the time horizon, and the expected annual return. Obviously, do your homework, check it out, make sure that this makes sense for you. Don't put all of your money into these things. But there are some really, really cool impact investments. I can point out Earth Day Canada, that they've got this eco-charge bond, $1,000 a bond, and basically they're building electric vehicle charging stations in Quebec and New Brunswick. So trying to build out that EV grid. Fair Finance Fund, super cool organization. They make loans to social entrepreneurs here in Ontario that are in the sustainable food space. So these are, farms, and these are social enterprises and markets and things that are trying to build a sustainable food ecosystem here in Ontario. So some really cool stuff. You probably won't get rich with these types of investments. They do tend to be bonds and, with a sort of reasonable rate of return, but certainly better than keeping your money in a checking account or under your mattress. So, really I'm here to help people. That I'm a financial planning, that if you're just getting started, if you're someone where, you've just got your first little bit that you want to invest, we do offer an online course. Really happy to have you check that out. My colleague, Daryl Brown, we recorded a whole bunch of different modules, and you can kind of go through, and it teaches you not only the theory, but also the practical application for how to put your money to work and buy these funds online. And then we also offer coaching services for people who maybe are a little wealthier, a little further in their journey, who already have existing investments and want to shift them over. I think I'm getting the hook here. So I'm just going to do my final thoughts here, which is that there are more choices than ever before. Make sure you choose things intentionally, and really want to empower you to don't just think about it, actually do it. Put your money where your values are, make a point of doing that. My contact information, if people want to reach out with any questions at all.
Thanks,
Awesome.
Tim. Yeah, I do encourage you to reach out to Tim. He's a great resource on this kind of thing. And we will have a Q&A after our next speaker. And I see there are already some questions. If some of them are kind of technical, Tim, maybe you want to go into the Q&A section and answer them, but I'll also ask some out loud in front of everyone, because there are a lot of interesting ones as well. Our next speaker is Myrtle Millares, Dr. Myrtle Millares from Climate Pledge Collective, and she's going to tell us about the Canadian banks. Not unlike sort of what Patrick was saying about pension funds, the Canadian banks are quite large for the size of our country, and they have huge amounts of capital. So what they do and don't do with their money and their lending is really going to influence and pretty much define whether or not we meet our emissions targets here in Canada. So we think they're really an important subject of our attention. So I'll pass it off to Myrtle.
Thank you, everyone. Thanks, Matt. So I am going to talk about banks. Banks, right? So we all have, or most of us have, bank accounts. When we walk into a branch, what we're looking at is a full array of retail banking options that are sold to us. So what this means is that we are big business for the banks. The good news about that is that that means we all have a voice, just like any retail store that you go to. If you do not like the service or the product, you have every right to say, I've had enough of this, I'm moving, or do something about it. So today I'm going to go through some of, how much we're talking here that the banks are investing and what they're doing about it and what you can do about all this information. So to start, this is a global ranking total investment report from Banking on Climate Chaos. So what this shows here is just the actual totals for fossil fuel funding that banks have given over the years. So billions are what we're talking about here. RBC, TD, Scotiabank, Bank of Montreal, CIBC, our top 5 banks are all up there. Next, we have a policy ranking, and again, from the same report, this policy ranking consists of a score given out of 200. And what this means is that they've looked at the actual policies to do with fossil fuels that each of the banks has. So they're looking at LNG, coal, Arctic drilling. So there are like 5 or 6 policies that make up the score. And as you can see, RBC, which does the best, is only at 17.5 out of 200. And the rest of the banks fall below that. So obviously we are seeing that there is a problem here. So what are the banks doing about this? So all the banks except for CIBC have made net zero 2050 pledges. So the key criticism here is that these pledges aren't actually benchmarked by interim goals that banks can use to get to this net zero 2050 pledge. So as we know in our lives, if we do not set interim goals, chances are we're going to fail. Now think of the influence that banks have in various sectors, the influence that banks have in our lives, in our industries, and you can see that failure to meet these goals is going to be incredibly disastrous. So we've already heard about climate risk, but just really on a very day-to-day level, we're obviously looking at climate breakdown here. The resources that we are using are at, they are maxed, they're at the tipping point. And at this point, the erosion, the violation of human rights, of Indigenous sovereignty is really at a crisis point. It has been actually for an incredibly long time. So this is obviously an issue. So without these interim goals, this is again greenwashing, which again, a term we've heard before. Another thing that banks do, for example, TD, all banks obviously grant funds to organizations doing great work. TD has an actual Friends of the Environment grant that wonderful organizations and people can apply for and get. So what banks are doing is tacking their logo onto the work that individuals are doing who are actually committed to making the world a better place, socially, environmentally. And they're hiding then behind this screen and saying, look at what we're doing, right? And we see logos on arts and cultural events, very important. I've seen them on BIPOC artist events as well. All kinds of things. So the bottom line here, though, is that what they're doing is looking at a need that hardworking individuals have, and they're using that to say, look, we actually do care about communities. We care about diversity. We care about Indigenous communities. Meanwhile, I point to you once again to the billions of dollars that they're then spending destroying the very homes, the very communities that people are coming from. So another thing that the net zero pledges do is talk about something called sustainability focused financing, sustainable financing. So we really need to take this with a huge grain of salt. Recently, there has been an article, a few articles with regard to Canadian banks actually having given Enbridge of Line 3 fame over $1 billion in supposedly sustainable financing. Now, this same article states that the terms of the recent financing make clear that Enbridge is actually going to use this to pay off debts and also to fund capital expenses like pipelines. And specifically, so here's the quote: "The corporation does not intend to allocate these net proceeds specifically to projects or business activities meeting environmental or sustainability criteria." So this is actually in the terms of this agreement. And the banks that are part of this, RBC, I think they deserve to be named, RBC, BMO, TD, CIBC, Scotiabank, National Bank of Canada, Desjardins, HSBC, ATB Financial, Merrill Lynch, Canada. So RBC is the biggest funder. However, all of the banks mentioned here are part of this. So again, this is a huge, huge greenwash directly in the pledges that they are touting, that they've had media calls about. Finally, this here has really angered me recently. So this is worse even to me than greenwashing. So we had our very first National Truth and Reconciliation Day, right? RBC had these great ads saying that they care, that, it says right here, unlearn and reflect on what this is about. They say that this is to honor the experience of the people who have suffered under the legacy of residential schools. And yet, look at this list of projects that they continue to fund, right? These are projects that too often really do not take into consideration free, prior, and informed consent. So this is worse than a greenwash. And this is one of the reasons that I think we really need to take action. And you should eventually get links to what you can do, which is my next slide here. So easily, you can just pick up the phone, make an appointment, talk to your branch manager, say you're hearing all of this information. So what's up with that, right? And see what they say. There are very set answers. They'll tell you about sustainable funds, ESGs, all that wonderful greenwash stuff, which you really need to pay attention about, and just keep pushing them and asking them questions. If you are a grant recipient, so Climate Pledge Collective is incredibly small. We know how hard it is to find funds to do the work that we do. Thankfully, we do it on frequently our budget, and we've got some great individual donors, but funds are hard to come by, right? And so if you are a grant recipient, totally understandable, you've taken a bank grant, but this is an opportunity for you to forward, push for more responsible policies from banks. This is really an opportunity for you to say, we're doing great work here, thank you for this fund, but it's incredibly hard for us to justify what we're doing when we're obtaining money from you, right? And so this is where our needs being turned against us, we can now use that and put that towards banks and say, what are we going to do here? Next thing is we have 2 pledges on our website. One is Banking on a Better Future, which is geared towards youth, but anyone can sign it. The idea behind that is that you're saying, I'm not even going to start banking at these institutions. Bank Switch is for those of us who already have accounts. Actually, I moved elsewhere a long time ago, but Bank Switch basically gives you talking points, templates for emails, phone calls that you can use with some facts that you can present to your banks. So by signing up with Bank Switch, what we're hoping to do is grow the number, and it's a slow and steady number. This is not a petition that you can just click through. This is a bit of conversation that gets passed on, hopefully, up the communication chain within the banks to really start that conversation going. And that's the core point. Whether you move your money or not is entirely up to you. Whether you switch your mortgage, which by the way, come renewal time would be a perfect time to do it, or if you're just about to sign, look elsewhere, because that is, like your life basically pledged to a bank. But basically, this is a way for you to take charge and just say, you know what, I want to know what's going on, and push for more from your bank. And then you can decide if you like what you hear, if you don't like it. The point is that you've had that conversation with your bank. Finally, there is going to be a global day of action on October 29. So as the name suggests, this is worldwide, hundreds of actions in cities across the world. Right here, so in Canada, it's going to be an action that is focused on RBC and their funding of CGL. And this is going to be a series of solidarity actions across the nation to just basically say, or to hold up RBC as a prime example of a bank, of a financial institution that is ramming a pipeline through Wet'suwet'en territory without free prior informed consent. So that's what that day is about. And again, that should end up in the chat. We will also send resource links afterwards. So look out for that. There should be a series of events on a map that you can join, or you can start one on your own. So one last thing I want to say about, when we talk about net zero, lowering emissions, the thing that I always note is missing are pledges with regard to meaningful policies. With regard to free, prior, and informed consent. So if we're not careful, we're talking about these emissions, in numbers, but what we're not talking about, if we ignore this, is a key root cause for why we're in this situation. We're talking about people's lives, people's human rights. And so that's definitely something that we need to keep an eye on, and something that I frequently do not see when we talk about net zero, lowering emissions, but as we saw, banks are obviously culpable in these areas. That's it. Thank you very much.
Thanks, Myrtle. Yeah, I want to encourage people to join Bank Switch. And I think if you think about moving all of your money, it can be quite intimidating. So I want to remind everyone that you can start the conversation before you move all your money. And we actually think that's more impactful for you to talk to your branch manager while you're still a client. I'm running the campaign, and I still have some of my accounts at TD. I've opened a credit union, and I've been complaining to them by email and phone and sort of moving some of the money, but drawing it out and making it painful for them will keep it in their mind rather than just suddenly moving to a credit union and not even telling them why. So we urge you to just at least start with that phone call or email to your branch to let them know that you're concerned about these issues. So we do have a time for a Q&A here. I'm going to go through some of the questions. A couple of people raised the question of growth and what's called degrowth. And I think it's really an interesting one, but I don't think we'll be able to settle it because it's a debate that crosses both philosophy and economics, and we only have a few minutes. But I do encourage people, I'm going to put a link to a degrowth person that I like, Serge Latouche. I think it's really something worth thinking about, whether growth for its own sake is valuable or whether we should be focused more on growing certain things and shrinking other things that we don't want. But I don't think it's a question that I'm going to put to the panel, unfortunately. But I did want to go through some of these questions. Oh, some of the ones I wanted have gone into the answered tab, but I think they would be interesting to a lot of people. So I will find them. Sorry. I guess one of the questions was that I do remember, while I look for the next, I guess is for Patrick, but sort of examples of pension funds that have divested, because I do think it's good for people. No, I mean, it's okay that you answered some, Tim, but I'll just have to refine them. But first, can we get Patrick to talk for a minute on successful pension divestments?
Yeah, that's a good question. We're tracking that issue really closely, and we think it's really important to track it because it helps to mainstream and normalize this conversation for Canada's pension funds so that they're not scared of divestment as a word. We think it should absolutely be a tool that pension funds should use. And there's a website called gofossilfree.org that tracks the divestments, whether partial, which might be coal and tar sands and Arctic oil, or full, which is oil, gas, and coal and pipelines. GoFossilFree.org tracks endowment funds, universities, foundations, pension funds, sovereign wealth funds, asset managers that have divested. And we count from that about 162 pension funds globally that have divested, at least partially. A couple notable ones, just recently, the New York State Common Retirement Funds, which is the third largest fund in the US, has committed to divest by the end of 2025. A bunch of the big New York City pension funds have divested. There's a series of Swedish pension funds, AP1, AP2, AP3, AP7, that have divested and are actually getting into impact investing now, as Tim talked about tonight. And the big one in Canada just last week, actually, we saw the Caisse de dépôt et placement de Québec, which is the manager of the Quebec pension plan, the second largest fund in Canada, announced it would divest of oil producers by the end of 2022. So that's the first kind of hole in the wall in Canada, was the Quebec pension plan announcing oil divestments by the end of next year. And we hope we'll see some other funds making similar announcements soon. But there's no other fund in Canada that has any kind of exclusionary screen on any fossil fuel other than that one announcement from Quebec last week.
Thanks so much. And I think another question that was interesting was the question about, it is a little bit related to the broader economic degrowth question, but I guess there was a question on physical investments and physical growth. Like, what opportunities are there for investing in things that don't create more physical things? Like, are there good investments that you would recommend in that area, Tim?
Yeah, and I can't turn my video back on, so you can either just hear my voice or if someone can turn the video on for me. All good. Oh, start my video. Here we go. There we go. Now you can see me. Yeah, so, I won't get too deep into it, but I think that this is often a big question that, and it relates to the big philosophic question around growth. And, what does it mean to have growth? And with investment planning, and the reason we invest is for growth. Like, let's be clear, we're putting our money to work so that it grows, so that we can not only keep pace with inflation, which eats away at our money if we do nothing, but also hopefully, grow and save for financial goals, like sending your kids to college or university, or, saving up for retirement, or, all these wonderful reasons why people save and invest. And there is always going to be this question, I think, from environmentalists about, well, maybe I just shouldn't invest at all, or maybe I should only do these sort of impact investments because they're the ones that are sort of like direct and have that positive impact. But I want to be clear here that, there is a huge trade-off for that, which is that you're not earning those returns, which means that you might not meet your financial goals. And there's one woman, a client that was an early client a few years ago, and she came to me when she was about 63 years old, and she was like, Tim, I've been a hippie for, my whole life, for decades. I always thought the system was going to collapse. Like, I always just thought the economy is unsustainable, like it's just going to crash. So I kept my money like under the mattress in like the safest things. Now she's like ready for retirement and only has about $200,000 saved up, which, hey, that's not a tiny, that's a fair bit of money. But if we're talking about retirement, like 200K, there's not enough. So there is this tension. And so, the approach that I'm advocating here is really like, let's earn those market rates of return. Let's save for retirement. Let's do it in the most sustainable way possible. I don't think someone's personal portfolio needs to be like absolutely squeaky clean. If you wanted to go in that direction, you would be limited to the impact investments, which have pretty big trade-offs. You could look at things like real estate and, things like that. But again, if you're a landlord, like, how ethical is being a landlord right now with housing prices the way they are? And if you're trying to, so if you're, doing affordable housing, perhaps that there are going to be, but that this is kind of one of the things that I think responsible investors need to accept, is that in the economic system that we're in, there is this assumed growth. And I want to be clear that this is growth in the money supply, and that what we need to do is then decouple that so that we can continue to grow the economy, continue to grow the money supply, continue to grow wealth, but not have continued growth in energy use, in resource consumption, in extraction, everything else. That when someone's like a teacher or a coach, they're providing tremendous value and can earn really good, money and returns without, having that sort of like physical growth. So it's it is a deeper question, but I think the question that was asked relates to that. And I think it's important to understand that, that really, if you're going to play the game, like, if you're going to do this investing thing, that, there is no such thing as a perfectly sustainable portfolio. And it's just kind of doing the best that we can given the options that are currently available.
Great, thanks so much. Another question that I found interesting that maybe, I don't know, either Tim or Patrick, any of the panelists, was the question, what can be done to ensure green and sustainable bonds contribute to net zero? So I guess who are we looking to regulate green bonds, I guess is the question here.
I'm happy to take a stab. I'll keep it quick. But there are, this is in terms of greenwashing, it can be a bit of the Wild West. Green bonds is one place where we actually have a framework. There's a group called the Climate Bonds Initiative. I think it's like climatebonds.net is the URL for them, but it's a guy named Sean Kidney. And they have a really cool stamp and they have this really clear framework. And then what you do is you get third-party auditors. So a firm like Sustainalytics, I know is one of the top ones that does this, to then verify that the money that they said is being spent on green projects actually gets spent on green projects. So I think it's, fortunately, when it comes to at least bonds, when it's governments or when it's companies doing it, then they can, we have the accounting measures to be able to audit that and provide the verification that, and whether it's like net zero standards, like net zero, there's a lot of debate about that term. So, obviously theirs is a little bit different, but I would say check out that Climate Bonds Initiative to see what their requirements are. And in my opinion, they're quite good.
And I think Patrick, actually, you wanted to answer this as well, right?
Yeah, just in addition to what Tim said, I also enjoy Climate Bonds Initiative as accreditation body for this. But there's also something we've done at the legislative and regulatory level. So in the European Union, they developed a green taxonomy for sustainable finance that actually categorizes what counts as a green investment or not. And there's been a huge push by the gas industry and the nuclear industry there to try and water it down to include gas investments. And so far, the EU stood strong against that. But it does look like a similar taxonomy is being developed in Canada. Unfortunately, I'm a little bit worried that they're going to water it down even more and create what they call transition bonds that will allow financing to go to oil and gas and coal companies potentially and claim to be transition finance, but we don't actually know what they're being used for, what they're using that money for. And unfortunately, there's been no environmental organizations invited to be part of that process even. So the process is being dominated by banks, by insurance companies, by pension funds, and there's no real Indigenous or environmental stakeholders at the table there. And we really asked the government to include us because we don't think that the financiers of fossil fuels that have led us to this place with the climate crisis should be in charge of categorizing what should be a green investment in the future.
Great, thanks. There are a lot of questions, so hopefully we can get some of our speakers to come in and type some more answers because we do want to move on to the panel. There's one more that I wanted to quickly answer. Somebody asked about EQ Bank. I have looked into them a little bit. My understanding is they don't make loans to fossil fuel companies, but I haven't seen anything in writing. So I think anytime you move away from the big 5 Canadian banks, you're going to reduce your exposure to lending to major oil and gas companies. So I think I would recommend looking into that, but bring it up while you're signing on and say, hey, this is why I'm coming over. You should put out an explicit policy about this. So yeah, but now I'd like to invite our panelists. There's 3 of them to turn on their cameras, and we're going to do this part a little bit differently. We'll have them each speak for a couple of minutes individually, but then we'll sort of have an open question and answer that will go a little longer because we do want to get into the complexities of FPIC in a different way. So on our panel, we have Cook B. Wilson and Eugene Kung and Kayah George. So I guess we can start with Cook B. Wilson. Just introduce yourself and give a little commentary on sort of what FPIC means in your life and in your work. And then we'll move on to some more detailed questions after everyone has introduced themselves. So thanks so much.
Yeah, thank you. We had a bit of a change because I didn't realize how much financial based this webinar was going to be. So I'm calling Eugene Kung to come first to set the context, and then we can go into my presentation. Because I think if we don't do that, it might not be as effective. So if Eugene can go first, then I'll introduce myself, if that's okay. Okay, thank you,
Great.
Eugene.
Thank you.
Sure. Thank you, Cook B. Hey everyone, my name is Eugene Kung. I'm a staff lawyer with West Coast Environmental Law. I'm zooming in this afternoon from the unceded territories of the Musqueam, Squamish, and Tsleil-Waututh people, also known as the Republic of East Vancouver. So yeah, it was really interesting to hear the previous presenters, and I think what I wanted to spend was a minute or two to just kind of connect some of the dots between the relationship between finance and climate and the relationship between finance and Indigenous rights, because it may not be obvious to everyone why they're connected and why the same dynamics and the same motivations that you may be bringing to the climate conversation can also be applied, and indeed, in our view, should also be applied when it comes to Indigenous rights. I mean, at its very basic level, what we're talking about here, right, is risk and quantifying a risk in a way that markets have not adequately done in the past. With climate, we see that happening. We see that happening in the insurance sector. We see that happening in terms of the possibility of infrastructure becoming stranded assets and the transitional and operational risks that Patrick talked about. Those same risks exist, and it was touched on a little bit by Myrtle in as it relates to Indigenous rights. And I would argue perhaps that is even more hidden or more ignored risk that markets have not been able yet to capture because of the ongoing colonial projects and the extraction that's connected with them. And so we're going to talk a little bit today about free, prior, informed consent, which of course is a minimum standard set out in the United Nations Declaration on the Rights of Indigenous Peoples, starting to be incorporated into Canadian law through some of the recent bills federally and of course here provincially. And what we want to get into a little bit is this emphasis and the just like within the climate world, how there are false solutions and greenwashing that we need to be aware of in terms of Indigenous rights. There are similarly good sounding but false solutions, and it's called, I think in the chat, orange wash. Another way to think about it is red wash. This idea of really being driven primarily by marketing or image rather than the substance. And what I mean by that in terms of free, prior, and informed consent is this temptation and what probably most of the policies that are out there, which want to reduce free, prior, and informed consent to a procedural requirement. It's just essentially another version of the consultation regime that we find ourselves in, certainly in Canadian law. That's of course opposed to a substantive requirement, which can have actionable and meaningful items within the financial sector. And there's a really close link between these Indigenous rights struggles, and particularly land defense struggles, and fossil fuel projects. The link, I believe, that was just shared in the chat is a recent report by in the Indigenous Environmental Network and Oil Change International that looked at Indigenous resistance to fossil fuel projects and found that Indigenous resistance has stopped or delayed greenhouse gas pollution, which is equivalent to 25% of the annual US and Canadian emissions. That is a significant amount. Now, we have other estimates from other studies that have looked at investments in resource extraction being held back or delayed by uncertainty over land claims and tenures. That's in the range of $600 billion. And so having a free, prior, and informed consent policy that's meaningful, that is actionable, that actually puts a cost on the failure to obtain free, prior, and informed consent, again, which is another form of risk that has just not been captured, is really the direction I think we need to head. And it's also part of the solution, right? Indigenous people represent somewhere around 5% of the world's population, but 80% of the world's biodiversity exists within Indigenous controlled territories. So as we are looking at this shift that's happening globally in the energy sector, we also need to look at where the solutions lie. And where, if we're divesting, where are we reinvesting? And we've seen time and again where there's opportunity, where the financial systems can recognize it, where there's control of decision making in land. Indigenous nations, Indigenous peoples are leading the way in terms of investing in renewable energy, in terms of moving forward in ways that are consistent with those worldviews. And so again, I just want to really emphasize that this kind of historic ignoring of Indigenous rights and the concerns, or minimizing it to a stakeholder or just a group who maybe is opposed to a particular project, actually has serious consequences that amount to ignoring what is a material risk. And so having a policy that's robust, that's actionable, that is enforceable, is actually a more effective way, similar to the way that we are now talking about the shift in terms of investing, of having a bigger picture to bigger picture view to lower a risk profile, to ensure that reputational risk, that like what followed with Dakota Access, which is happening right now with Coastal GasLink and RBC, don't play out, but also operational risks. We've seen analysis from TMP systems that suggests that tenure-related disputes for projects can increase an operational cost by 29 times. That same organization did a study that looked at 76% of mining, 49% of forestry, and 64% of dams faced some material risk related to that tenure. So this is not just about doing the right thing. And let's be honest, this is also the right and just thing. And we've just had a day of reflection on this. But it's also, when done properly, can be better for your balance sheet and better for the long-term forecast and outlook of financial institutions as well as personal institutions. So I'm going to pause there. I'm sure there's lots more to say. I know there's lots more to say, and pass the mic to the next person, which I believe is Cookpee Wilson. Thank you.
Yeah, Cooksham, thank you for that, Eugene. That provided a really good context of leading into what we need to speak about now with free, prior, informed consent. So I think the key message is that banks and other significant investors, as well as project proponents, must incorporate free, prior, informed consent and Indigenous title and rights as a critical aspect of that financing for a just and clean economy. And what Eugene was talking about with land rights, we hold the underlying title through many of our territories. And that's the example in the Secwepemc territory. Our title is held collectively by our proper title holders, which are the people, and they haven't gotten the consent. They actually have a declaration opposing Kinder Morgan, and they actually, that includes the Trans Mountain pipeline now, which goes through about 513 or 18 kilometers of our territory, unceded territorial lands, which means that we haven't surrendered, relinquished, or sold any of our land to the federal government or the provincial government or any corporations. So that's a really important fact to understand in regard to free, prior, informed consent. With the United Nations Declaration now with C-15 and Bill 41 for the acts to implement the United Nations Declaration on the Rights of Indigenous People, we need to fully implement them, not partially implement them under the federal or provincial law. So the continued extraction of oil and gas reserves for energy production has to halt in order to achieve the greenhouse gas reductions. I see the stats that were put in there that, different organizations, different institutions are saying, well, we'll cut that, we'll change that in X amount of years. But I really think Mother Earth doesn't have that time. So you're talking about a different timeline totally in regard to Mother Earth and the water. So we really need to mitigate the most catastrophic effects of climate change. And that's what everyone was talking about today. In BC this past summer, we could just reflect the experiences of the devastating wildfires and extreme heat has made it clear that climate change is an emergency requiring urgent action. So the climate's not waiting, Mother Earth's not waiting. We can no longer sit on the fence post in regard to that. There has to be this legislation, policy, and action now. First Nations have the right to make decisions on matters affecting our rights through our own self-determined processes. It's Article 3 and self-determination in the UN Declaration, which includes decisions regarding free, prior, informed consent for any activity within our territories or in our territories. So many territories are similar to Esquetan. They're unceded. We can see that with Wet'suwet'en. They have their own governing and self-determination systems. So the extraction of fossil fuels and the development of oil and gas infrastructure in our territories affect our rights. So basically, if we don't have permission or give permission or consent, then the companies shouldn't be permitted within our territory. We hold the land rights, we hold the water rights, we hold the resource rights. The province has assumed jurisdiction through the doctrine of discovery, and that's what they've been relying on. But we see more and more the legislation, the minimum human rights UN Declaration, and other things happening now that are just toppling those legal fiction that's happening now. And then the impacts of climate crises are increasingly affecting our rights, our right to fish, our right to hunt, our right to harvest, and our right to collect our own traditional medicine. We see that especially in COVID, our right to safely live in our traditional territories. And that includes the tiny houses that tiny house warriors have built. We should freely be able to have them within our territory, and the government shouldn't try to reduce our use and occupancy in any way. We hold those rights internationally and nationally, and the government has not we haven't sold or relinquished any of our rights to them. Canada's track record of meeting its greenhouse gas reduction targets has been very poor. I think everybody pretty much aware of that we're way off target, both federally and actually provincially. Changing our relationship to fossil fuels require much greater cooperation between our First Nations, our proper title holders, the Crown, industry, and major investors. And I do like the talk I'm hearing today about, making better investment financial decisions. How do we create banks that aren't investing in these climate wrecking projects? Because I was thinking the same what Eugene was saying. I said that actually it's reconciliation wrecking projects too, right? Because they're going against our own Indigenous people, and a lot of people don't know that these major banks are actually investing in these Trans Mountain and LNG that are actually, impacting our people's land rights right on the ground, and horrifically bringing in militarized and RCMP forces, ex-RCMP. We were calling them petro police. So anyway, that's actually happening, in many of our communities. So that's why it's really important we had a voice here today. So adopting free, prior, informed consent as a minimum standard for financing natural resource development is a part of a beginning to change this relationship. The Union of BC Indian Chiefs has recognized the influence that banks exercise on global carbon emissions through their continued investment in fossil fuel companies. So we've called on the governments, Canada's big five banks, to take accountability for their contribution to climate crisis and to phase out fossil fuel financing and the financing of projects that violate our Indigenous land rights and our Indigenous human rights. I think that's really important to add, Eugene, with the context you gave here today. So those are my speaking points, and if there's any questions, I'm available to ask, and I'm looking forward to Kayah's presentation next. Thank you. I'll hand it over to her.
Thanks so much. I'm also looking forward to Kayah's presentation.
Hi, my name is Kayah George. I come from Tsleil-Waututh Nation and Tulalip Tribes. I'm the divestment campaign lead at Indigenous Climate Action. And yeah, I didn't have a specific presentation ready or notes ready. I kind of wanted to have a free-flowing conversation. I recently created and moderated a divestment webinar from an Indigenous perspective a couple weeks back, and I think it's so important for the public to be aware of where their money is going and to be educated on these matters. And something, even within my position as a divestment campaign lead, it's always important to focus on what happens after divestment, and that's upholding FPIC. The most important part. I'm glad this is happening because I took a really big shift from, okay, we're targeting these banks, and a huge target for me in August, this past few months, was targeting Chubb Insurance to divest from the Trans Mountain Pipeline, which, thank you, they've divested. And I wrote an article about that on my opinion on why they should divest and how it's important to me and my nation. And yeah, that's so very good news. Happened very around the same time as the webinar. But this is the next step in that. We've gotten them to divest, and we're still planning on getting many insurance companies and banks to divest from dirty fossil fuels. But what comes after? What happened? What about the decisions that come after? And that's upholding FPIC. So every decision made should morally involve Indigenous peoples, but also strategically, it's very important to listen to Indigenous peoples on the matters of climate change and climate disasters that are happening. And that was a big part of my position at ICA, was oftentimes Indigenous voices are left out of the divestment movement and climate justice fight, which, as was stated earlier, and I want to thank Eugene and Judy Wilson for a lot of their words. I want to echo everything that was said. Amazing. But a huge part of this fight is Indigenous people's voices, and a huge part of the next steps as we look at what's going to happen after we divest and after we stop a lot of these corporations. Every decision moving forward should be looked at through a lens of our sacred laws, and it's the morally correct thing to do. And strategically, when we want a more sustainable planet, it's the best decision moving forward. And that's something I don't think you should bring up climate justice without bringing up Indigenous people's rights in any context, really. But in the climate justice fight, it's very important. It's very paramount that we make these points. And I look at my nation, who's been fighting against the Trans Mountain Pipeline since I was 11 years old. Over 11 years ago, we've been fighting against the pipeline, and we looked at this through our own cultural lens. When we considered this pipeline and we looked at the implications it would bring coming through our territory, we seen that this would have disastrous effects, not only for us in this current generation, but for all future generations and all the communities surrounding us. So for all those reasons and many more, we decided to take a very active stance against the pipeline and anything that comes through our territory that is a risk to our future generations and all of our future generations. And so with that, we created a 1,200-page assessment using our sacred law and partnering with many different anthropologists, economists, and scientists to say why this project shouldn't exist. And we're using that, and we invite many other nations and many other peoples to use that going forward, to use our sacred law in this context and bring it forward and uphold that in a lot of these legal scenarios and a lot of these places. It's important to uphold that we have a connection to nature, and we have a connection to these lands and waters, that it affects every decision we make around it. And that's something that I always like to bring forward is that spiritual and cultural connection we have. And how that influences all of our decisions and how it's important for all of the people on our unceded territory to uphold as well. And I'll leave time for questions now. Thank you.
Yeah, thank you. No, I really actually, I liked what you said about what happens after, because I know in my life, I've been so focused on sort of the climate crisis and trying to solve this. It's the clock is so short that we really do have to sort of think about what happens after. So yeah, and we also wanted to have a bit of a panel discussion here. So I had some of the questions that I was thinking of asking have been answered. So I'm gonna change it a little bit, but I think one thing that Cookby Wilson mentioned was the distinction between the UN's version of UNDRIP and what's happening in Canada, that we have a weaker version here currently. So I wonder if anyone could speak on what we're lacking in the Canadian version of that.
Well, I think this could be Wilson. Well, the C-15 and Bill 41, they're acts to implement the UN declaration. So what we want is the full implementation of the United Nations Declaration on the Rights of Indigenous People, not what they call domesticated or not under, the province and things like that. So because one point a lot of our leaders make is that, and same with many in my family, is that the Indigenous laws, jurisdiction, and legal orders, they're first and foremost, they're intact the same way with our title and rights. So we didn't give them up. We didn't give our governing systems up. We might have to rebuild our nations, and our laws are written on the land. So that's what I was referring to. And then we just have to be very watchful and mindful when they're doing these action plans to implement the UN declaration. I know our community, we had like a 30-40 page document just on the different things we were concerned about in regards to how implementation will happen. And it's actually in the province, they're asking the proper title holders to submit information on what they could look at, how they would do the implementation of it. So the action plan. So that's currently happening right now.
I'll just add to that. Again, to repeat this temptation, and often these definitions you'll see in things like the Equator Principles and other documents that look at Indigenous rights, is this temptation to be drawn into the process piece, that it guarantees process. And I would invite folks to think kind of beyond just the confines of free, prior, and informed consent, which of course in its own is a very powerful concept, but really underlying that concept in the United Nations Declaration is something that Cookby Wilson is talking about, which is self-determination. And here, in Canada, we've had for a long time a recognition of this issue, but a failure, perhaps deliberate because it's inconvenient, by crown governments. And if you think about what that means, the crown literally representing the Queen of England, and the assumed jurisdiction on the land, this is not a new issue, right? The Berger inquiry in the late 70s into the Mackenzie Valley Pipeline, one of the primary conclusions was that there should not be any new pipelines or infrastructure until the underlying land issues have been resolved. Likewise, the Haida decision from the Supreme Court of Canada, which really set in place the current consultation regime, was always meant to be, and if you read it in the case, a temporary state of affairs while the underlying land issues were addressed. And that is really where we failed to actually move forward. And I will also add that just because it may not yet be the legal standard in Canada does not mean that private enterprises like banks and companies can't see this as a practical requirement. Companies exceed minimum standards all the time. This approach, which is ultimately colonially informed in nature, is that you just do the bare minimum, and that's all you need to get by to get the kind of the certificate from from the federal government or the provincial government, or to pass or survive a judicial review on consultation. That is not consistent, in my view, with real reconciliation. And if people are thinking about what it means and what needs to shift, it's these types of things. And there are definitely ways to do that within the private sector, but also as individuals.
Thank you. Actually, it connects to another question that I wanted to raise, because as you said, banks can take this on themselves. But I think one question is, often the projects are conducted by one company, and then a bank is lending money for to a resource company. So does anyone have thoughts on how banks should handle that relationship, since they're not actually developing the project? How do they handle that?
I know one thing they do is they ask what their relationship with the First Nation is, and if they have done engagement. So I think, and we don't have control on the pen on that. So I think it should be a better process on asking us, can the banks ask us, and Eugene laid it out very well. And I think the problem they don't do that is because it exposes the uncertainty, it exposes the risk. So if most of the Crown land in BC is held by underlying title of various nations, how do you do the insurance? How do you do the banking? It's uncertain. I know my cousin Arthur Manuel did a lot of work in that area of the contingent liabilities and the risks. It's another area that could almost have its own webinar, because there's so much to it. And I know that's why they try to ignore it, because they don't really want to understand it. And because we hold title to every tree in the province. We hold title to every rock in the province. We hold title to all of the water. We hold title to all of the land. So that's why it's such a great risk. The banks probably wouldn't know, if they could see that and, understand it better. And then the company wanting the investment, how do they check that box off? Maybe Eugene might have a bit more on it, but it is about our self-determination. That's why we need to be at, the forefront on it. Thanks.
Yes, I do have more, but I wanted to leave space for Kayah if she has anything else.
Yeah, I completely agree. And I think in this situation, it's up to individual companies to uphold FPIC, and they have customers and they have people that could hold them accountable, and they have audiences that they could reach. And so when there's an oppressive government making these decisions, I think it's really good to go directly to the nation and to do the morally correct thing to do and listen to them. So that's my quick piece on that.
Thanks. Yeah, and I do think there is a role that financial institutions can play and should be playing better. Just to come back to my initial point, there is on some level, this is about risk, right? And we know that risk and the cost of capital are connected. And so if you have two mines, for example, that are both on Indigenous territory, one of those has the free, prior, informed consent, ideally the equal participation of that nation in that project, and another one doesn't. One is clearly, and the other one is opposed vehemently by the nation whose territory it's on. One of those is clearly less risky from the other, and that should be reflected in the cost of capital. But financial institutions could even go further. They can require documentation of free, prior, and informed consent. They can, I think the ideal scenario is that they would only fund something where that can be demonstrated. A weaker version of that would be that it affects the cost of capital. If a couple of percentage points in the interest rate, that's going to make a huge difference. And if that is worked in and priced in, then that's certainly going to have a shift. But I think it needs to start with a policy that recognizes Indigenous rights. We're still very much in an era of denial as default, both from the federal government, and that trickles all the way through to many of the companies who are kind of adhering to Canadian law. And just to Cookby Wilson's point about certainty, the uncertainty that we're seeing, I think, often gets ascribed incorrectly to Indigenous opposition, but that uncertainty actually comes from the denial of those rights and the denial of and the failure to recognize. Where you get certainty is when you have free, prior, informed consent. You have processes which ensure the meaningful participation and engagement. And in some cases, a no will mean no, right? But that's certainty in its own sense. And it also doesn't have to be a project by project basis. We've seen some land use plans by Gitineau, for example, here in BC, where they've set out within their territory where it's a no-go zone and there's no no negotiation about that because of significant ecological, spiritual, cultural relevance. And there are other places where they're open to discussions about timber or whatever other resources being extracted. That type of certainty is what investors want, is what companies want. And it doesn't have to be on a project by project basis. That again comes back to the question of self-determination, of the question of land and who is controlling or making decisions about that land. And so there's lots of ways to that banks, I think, could play into this. Just one thing I'll mention, that there are lots of elements to policies that could be implemented. I'm certainly not the sole expert on this, and this is something that needs to be developed in conversation and with the full participation of Indigenous peoples. But some basic elements like a grievance mechanism with teeth, like reporting, these are the types of things that can actually change, because you can't manage what you don't measure, and you need to be able to understand what the behavior of these companies is and how it's going to affect future projects.
Eugene, I just wanted to add the values and principles of the proper title holders in the criteria, because that is really important. Of course, a lot of our people mostly will not want to invest in dirty oil and gas. We would rather invest in sustainable green energy, renewable energy that doesn't impact, the Mother Earth, the water, the plants for the animals, or any of those things. So because we believe in living in harmony and balance with that. So there would be a significant change, and with the recognition of our land rights, so there would be a lot of changes on the territories for sure. Thank you.
Thanks so much. I think I just want to, so what I'm mostly hearing is that even before FPIC is the question of sort of land rights and self-determination, and that banks and other pension funds, large institutions should be dealing directly with Indigenous nations. And I wanted to let people in the webinar know that we are also going to take questions to the panel from you. So you can use the same Q&A function. And while you're filling some in, I had one last question that I was wondering about, was how do you handle, and I guess maybe we've already answered it with some of the land rights points, but how do you handle FPIC in situations where Indigenous communities have differing perspectives? There's not necessarily agreement within a community or between different nations.
First of all, I'd like to say the government created that. They created the Indian Act. They removed us from our territories. They forced our children into residential schools, did the 60 scoop, are continuing to remove our children from our communities through welfare. They did that with real intent to remove us from our land, and also to remove us from our governing systems, and also to break down our families, to basically assimilate us into Canadian society or doctrine of discovery. So a lot of it's rebuilding a lot of that right now. The government calls it Indigenous governing bodies, but a lot of it's like nation building or reconnecting with our land, reconnecting with, our laws which are written on the land, all of those things. So going back into a lot of the research, and because we still have strength claims to deal with, because that's why we end up in court a lot. The government still has that in process. Of course, we want to remove it, but again, it's their protective mechanism for their control over land and resources. But for us to rebuild our nations are really important, and then determine through our, whether it's clan systems for some nations. For us, it was, a lot of our head of family system. They had large areas of land that we managed. We had villages, that we were quite a large tribe in the interior, the Secwepemc Nation. So it was 180,000 square kilometers. So we had like 32 village campfires, or what, if you want to call it that. But it was a vast area, and we were like a warrior nation. So it was quite a large track we protected and defended and managed. But we have, what a point I was getting to, I guess, is we have historical declarations and accords with other nations. So we would have had like one with the Okanagan, I think it was the White Arrow Treaty agreement, and then we would have had the Fish Lake Accord, and then we had hunting with the Stoney people. We have all kinds of laws that were done by our ancestral chiefs already. So it's researching that. I did do some of that research when I worked for the Tribal Council. So I think I did everything except I missed a few, but they've got a complete listing now. So it's upholding our ancestral laws and upholding the laws that were written on the land, because who are we to change them? They can't go under provincial or federal laws. They were the first supreme laws of the land. That's in the 1910s for Laurier Memorial, and that we did in 1910 to the Prime Minister then. So anyway, that it's a lot to comprehend, because people don't realize we had our own governments, we had our own laws, we had our own language, we had everything nations have. So in Canada tried to eradicate that, and people are getting educated now with the residential school mass graves and the unmarked burial sites now, a better picture what this genocide looked like. But yeah, our nations were self-determined then, and we're working towards that now.
Yeah, and I want to add to that, and like in the cases where there are like disagreements between nations, we had ways of dealing with that. We had laws. We coexisted since time immemorial. So we had agreements. We had different nation-to-nation relationships with the nations around us, and ways of like dealing with disagreements and dealing with projects and coming together. So those are all things that through sacred law we could handle and have been handled. And even if you look at the massive language diversity in the West Coast, that goes to show a lack of imperialism. Like the coexistence was allowed and supported, and coexistence of languages, of cultures, and of opinions. That's something that existed since time immemorial. So yeah.
Yeah, absolutely. And I'll just, I think this expectation of unanimity or the existence of disagreement is something that happens in every single community. Here in Canada, we just elected a government who got a third of the popular vote. That's some pretty serious disagreement. Yet no one is questioning the legitimacy. Well, sorry, people are questioning the legitimacy of the state, but for different reasons. And so I just think that standard we should resist the temptation to see Indigenous peoples as a monolith, because obviously they're not. That's the whole point of self-determination, is that each nation will have their own laws, whether it's, as Judy mentioned, a clan system, maybe a regional place-based system. There are different legal traditions within Indigenous communities, which are admittedly in different states of intactness because of the ongoing colonial impacts. But at the end of the day, these are decisions that should be left to those communities to make for themselves. And for, just kind of anticipating where this question kind of came from, for something like a pipeline or a railway, right? A linear project that is necessarily going to cross multiple territories, that's just the physical reality of a linear project. And when it comes to a pipeline, it needs to be 100% complete to be 1% useful. You can't have 99% of a pipeline with a 1% hole in the middle of it. And so again, like, to have this expectation of unanimity, I think is flawed, but also there are certain projects that will be more difficult to get the consent of people on because of just the physical nature of them, whereas others maybe are more contained within certain territories.
Thanks so much. Yeah, that's, I think, why I raised the question is I wanted to know sort of what does bridging those disagreements look like in practice, and what are the historical sort of examples of that? So I really appreciate everyone's answers to these questions. I have a couple from the Q&A here that I'll try to get to. I guess I'll start with one that says engagement seems hard to measure or quantify, and then banks that will claim to be involved in engagement, but their corporate culture does not really work well with a long-term engagement with a community. I think we got into that a little bit in terms of, rather than engagement, we're looking at sort of real going back to the land rights. But if people wanted to comment on engagement and different levels of engagements and what that would look like with banks, that would
Well, I
be
think Eugene spelled it out. It can't be just procedural, because we've seen that with National Energy Board, and when after Delgamuukh, they came out with referral notices, and that's merely all they are. They send out notices. Oh, we want your feedback within this X amount of days, and you put them in. They don't even mean anything. I think NEB actually they got told that that process wasn't adequate. And I think it's up to the proper title holders to determine what their processes are for engagement. Like in our community, we go to our people for a lot of the engagement, like say with highways, it's been very extensive. And we told the province that's just the way it is, that all of the members, both off and on reserve, need to have their input into these important decisions that are going to affect their lives. Chief and councils come and go, but the people need to live with these things. So, that was why the extensive engagement. The pipelines didn't engage us, right, properly. They might have did presentations to some of the communities, but, not an in-depth process at all. So it's very severely lacking. And I know I get this question a lot because, we can't rely on the provincial referral process system, and we can't rely on National Energy Board system. They're all just procedural stuff. They totally ignore our recognition of our land rights and our water rights and, our values and our principles. So, and I know Tsleil-Waututh, Kayah's community did an amazing environmental study and report when they had the oil spill in their inlet, the Burrard Inlet, and the government just seemed like they completely ignored it. And meanwhile, I looked at it and it was one of the best reports I've ever seen. And Sumas probably will have a report too coming up because there was an oil spill in their community as well. But then a lot of the burden comes on us for costing it and paying for it. Whereas, we should be able to have the resources to do that proper. Because I heard your question about monitoring and evaluation and that. But again, that should come through our proper title holders, offices and procedures. And that's what needs to happen.
I'll just add two quick things to that. The first is that more often than not, this engagement, which is based, as I said earlier, on a kind of a fundamental denial or skepticism of the existence of rights, then becomes what some people have called the prove it mentality, right? So a nation asserts rights and they spend their entire engagement proving that they have the right to fish or hunt on the lands that they've always lived on and never given up. And that becomes the engagement, and rather than actually dealing with the issue at play. And the second piece that I think makes this very buying, certainly from an Indigenous perspective, kind of, it comes to, if we want to talk about reconciliation or decolonization, is this element of time, right? We have corporations who are being driven by quarterly results. We have governments that are being driven by election cycles. And then often in Indigenous communities, those timeframes are stretched much longer. You're common with the concept of 7 generations. And so that is also a colonial imposition. And certainly in the consultation context, where you have nations who are completely overwhelmed with referrals and timelines that are not realistic when you look at the cumulative number of projects in their territories to review and engage with meaningful, like that's a tension I think that exists that I don't necessarily have the answer for, other than we need to see that these are different ways of looking at this. And we've touched a little bit on degrowth, or the kind of reliance on growth earlier. Something that in Kayah's webinar and other ICA work that I learned just recently in their webinar about Indigenous economics, and I encourage anyone who's interested to check that out, was this difference between a taking economy and a giving economy, right? The fundamental underlying, like, animating piece of those economic systems are different, and I think those are the types of things when we're talking about actual reconciliation. It's not just about saying forward or saying sorry and hopefully not feeling bad, but actually, like, how do we actually bridge these gaps? And again, back to the point I said earlier, if we're talking about the climate crisis, these are the solutions that also lie in shifting the way that we look and think about the economy, away from one that requires constant growth just to remain somewhat stable.
Thanks so much. I'd like to give Kayah a chance to respond if she'd like to.
I think that was well said from you both. And yeah, I want to also echo that, like, engagement from an Indigenous perspective is more inclusive and includes, like, the next several generations, the matriarchs, the elders, the youth in the community, beyond just, like, the council. That's something that's really important, that needs to be people that need to be heard. And yeah.
Thanks so much. I think we have time for one more question. So there's a question about sort of reaching out, and I think this is what we started talking about with engagement, but reaching out and communicating across such a gaslighterly chasm when banks are defining risk about climate chaos and ecological collapse as a material risk to wealth and to profits. Like, I guess there's, in addition to sort of the engagement processes, there's like a real communication gap as well in terms of thinking. So if people wanted to comment on that, that would be great.
Yeah, what one hand is doing and what the other hand is doing for government and industry is certainly, I guess, underscored from Myrtle when she said, the banks are investing in Enbridge, but at the same time, they're saying they're doing all this stuff, investing in clean, green, renewable energy. So I think that's the things we're dealing with, to expose it, to talk about it like tonight and educate people, I think is going to be really important. And then also looking at the ones that are doing the good work, which was, the better investing, if you will, in things that, the shift that we all need to make towards, protecting Mother Earth and, making better investments and earth-friendly type of projects that aren't going to impact our water and our land, and most importantly, what Kayah and Eugene and I are saying here is also won't impact Indigenous land rights, Indigenous values and principles, because I think that's the equation that's been left out far too long. So thank you for including us in this webinar, even though you're thinking, well, you're talking about finances and climate change. Why are you talking about Indigenous rights? So there's the real communications. And I think we do have to do a lot more work on that. I was just flagging Josh, who's here for the Union of BC Indian Chiefs, saying I think we have a lot more work to do, in some of these areas. So I really feel that's important, because people, they look at the residential school genocide, but they don't realize, all these other issues we just talked about tonight, how much it affects the lives of our Indigenous people. Why are our people so displaced off our land? Well, the government did that by design and agenda. Why did they put us on programs and services? Because they wanted to for us not to access our wealth from the land. So programs and services and welfare, that's what they did to us. They made us dependent on the government and made us dependent on program services. Right now with self-determination, we have opportunities to turn that around so that, we're back on the land and we're managing and controlling and doing self-determination about the projects that come in our territory. And that's the way it should be. And I think so I'm just supporting your recommendation, more communications. I don't know what the next webinar is going to look like, or the next communication thing, but it's a lot to understand. But thank you for Myrtle and, the others there that, get it. We all have to work for everyone to get it, so that we can recognize, the Indigenous people, and because they were so displaced, and you could see the horrific numbers in any of the categories you want to talk about, the social, economic stuff, we need to turn that around. Thank you.
Thank you. We'll take other answers to this question.
I guess, I, as a non-Indigenous person who's learned so much from Kayah, from Kupi Wilson, from the folks who I've been privileged to work for and with, I see this tension, and I guess my answer is that kind of to one of the comments you made earlier, Matt, about the urgency of the situation we're in. We do need to very radically shift the way we operate on this planet, very, very quickly and very broadly. And as Myrtle mentioned, the banks in big five Canadian banks, but financial institutions generally, are a huge part of that problem that they need to shift. And so to the extent that we talk to them in the language and the concepts that they care about, risk and uncertainty, which you've heard a lot about today, does not mean that that's the only solution or that's the only path forward. But in order to move, it's almost a strategic decision rather than a principled one that can be aligned with our principles, right? And that if you were trying to move an actor and get them to do something different, you want to understand what they care about. And so, like I said, while recognizing Indigenous rights is the right thing to do, the moral thing to do, the correct thing to do, that's not necessarily going to motivate a corporation who has a legal obligation to try and maximize its profits. So there's shifts that need to happen everywhere, and using that language and a multitude of approaches and tools is, for me, a part of it, but not all of it. And so I get that it can feel uncomfortable, can feel disconnected sometimes from the head and the heart. But at the end of the day, for me at least, what I'm motivated by is trying to, and let's be clear, the planet is going to be fine. It's whether it's going to be inhabitable for these animals who had the audacity to think that it was all here for our enjoyment and nothing else.
I want to echo what's been said, and thank everybody for coming and listening. And I hope going forward, when people consider and think about climate change, you don't leave out Indigenous rights. And like what was said earlier, from a moral standpoint, but also like strategically, it's incredibly important. And also realizing the power that a lot of people have. I mean, they owe us. These banks and these institutions work for us a lot of the time. So holding them accountable is extremely important. And we've seen that work. Like recently this year, we've seen the amount of people, so many people coming out and voicing that, how it has worked, how we have been listened to, how we have gotten massive insurance companies to drop these pipelines. So I just encourage people to really uphold that and hold these institutions accountable, and going forward for them to uphold policies around FPIC. And yeah, that's it for me. Thank you all for listening, and thanks for having me.
No, thank you. Thanks so much. I want to thank all of our speakers, Patrick and Tim and Myrtle and Eugene and Kayah and Kupi Wilson. It was really great. I learned a lot today. And then to the audience, I just want to encourage you all to sort of put some of this into action. I think often like we can't do everything, but all of us can and have to do something. So figure out which action works for you. Maybe it's working on your personal portfolio. Maybe it's signing up to get involved with your pension fund. It might be following West Coast environmental law or the UCBCI. My acronym is UBCIC. So check
Union
them out,
of
follow
BC
these
Indian
groups and
Chiefs.
sort of
Yeah.
echo their claims and Indigenous climate action as well. So yeah, thanks so much, everyone. I hope you enjoyed it. I hope you learned a lot. I hope you learned as much as I did. And we'll reach out with some more links as well by email. So thanks again. Thanks so much. And to our tech team, Ray and Sharon as well. You didn't see them, but they kept us running. So thanks to them as well. Thanks, everybody. Have a great night.